We go bang on 12:30 on Thursday. Welcome to Richard Armstrong. Nice to see you, Richard.
Thank you, Simon. Hello, everybody.
Very good. So this is the Thursday edition of Munch&Learn. We did this edition on Tuesday at 8 a.m. This is the 12:30 version. So I'm very happy to have Richard on board. He's going to talk to us about the 5 things you can see on the slide that are presented. I would just say 2 things. There's no video and no audio for those of you on the webinar, but we are recording this session, so it will be shared afterwards. And if you have any questions, please put them in the Q&A box. So the plan is to run for 20 odd minutes, leaving us 10 minutes for questions and answers. If there's not a huge queue of questions, I will ask Richard to just keep on talking so we use up the maximum amount of time. So Richard, the floor is yours.
Thank you, Simon. Thank you for setting the scene, and good afternoon, everybody. Thank you for being here. As Simon said, it's half an hour, 20 minutes-ish of transferring some knowledge to you because your company could benefit from one of the 5 subject headings that we see there on screen. And the good news is this is government backed. So this money is, I think, free money, as some people call it. What are they? They are 4 tax relief legislations, R&D, research and development, that is, patent box, capital allowances, remediation of contaminated land. We'll spend a couple of minutes each on those. And then the 5th service proposition is grants. So tax relief, we spend the money and get some of it back. Grants, I'd like to get some money before I move in investment. So they're the 2 areas that we're going to look at. Thank you, Simon. In terms of who we are, we sit between the government that want to give companies money and those companies that didn't realise that they could benefit. So we're a specialist provider in that area. We call ourselves, say, the UK's #1 innovation funding service provider. Won't go through all of those bits up there. You can read for yourself. But we've got a lot of clients. We've been supporting them now for, it's actually nearly 13 years. Growing rapidly, and we work on a contingency basis. So we've always worked on the principle that we'll help the client. If they benefit, we will after that. And because of all the services that we offer and the way that we offer it, we were purchased by a very large $730 million US-based financial services company called Ryan in spring of this year. We have people like Grant Thornton and Ernst Young trying to buy us, but we're not accountants. We're a different type of service provision. Thank you, Simon.
Fantastic.
That's who we're backed by. So it's nice to have household names such as the ICAW and the Law Society recommending to their members that if they have clients that need to know information on all of the services that we offer, then they will recommend us, which is great. And CIMA and IFA, other financial accounting bodies. Thank you. So let's move on to what is R&D. There were those people that have a perception that it's all about men in white lab coats, which is absolutely right, but it's a bit more than that. Thank you, Simon. And I evidence that by, there you go, putting up a picture of a sheep farm. It's not a sheep farmer, but it's the things that he looks after, the sheep. A lamb adopter was something that he had developed, and he got £9,000. A solicitor's practice, R&D, where's that going? He developed his own IT system, his own case management solution, because nothing available off the shelf was deemed fit for purpose. So he got £26,000. The brewing industry, we've helped hundreds of different brewers, and in the gin sector as well, lots of tasting and testing going on there, I can assure you. But beer that tastes strong, which is actually very weak, or the other way around, or shelf life, development of a product, and beer manufacturers, the average claim in that sector is probably in the region of about 80,000. And talking of 80,000, the jeweler there, the one jeweler in Harrogate, he's had over 80-odd thousand pounds for developing a new way of holding a diamond stone in a ring. Now that may come across as just being his normal day job, but it's when you move beyond what we call the competent professional skill set, and there's lots of challenges, that's when R&D can start to happen. Thank you, Simon.
And you're going to talk about the criteria, what fits the R&D criteria. Great stuff.
Yes, absolutely. So I guess to summarize what we said so far, I typically don't say to me, what R&D have you done? Because the sheep farmer would look at me and gone, well, what do you mean? So I typically go, what business change or transformational growth have you been through in the last 2 to 3 years? Well, actually, yes, we bought a company, tried to merge the 2 IT systems, absolute nightmare. Took us hundreds of thousands of pounds. The IT guys didn't know how they were going to do it. They had to build these very special APIs. That is the beginning potentially of some R&D activity, because it can exist in a product that you make, a process that makes that product, or an IT system. So business transformation, change, or growth. Thank you, Simon. So what is R&D? I just mentioned R&D sits inside a product that a company make, a process that makes that product, or can be an IT system. So there's a drinks wholesaler in Glasgow, for example. They buy a drink, put it on a shelf and sell it. They've had over £800,000 over the last 4 years. Why? Because they developed their own ERP solution, enterprise resource planning solution, and IT level work with different types of coding, which is unique to them. So there you go. And the legislation states, these are legal phrases, that whatever product or process or IT system that you've built needs to tick one of three boxes. Is it unique, or is it appreciably improving what products or processes or IT systems are in the market at the moment? Or finally, legalese language, duplicating the effect of. I put that in sort of speech marks because really they could have used the word copy. Are you copying a competitor? So as long as it's a product, a process, an IT system that's unique, appreciably improving or copying, so far we've got R&D, and the critical bit is the next sentence, and that is that there has to be some form of scientific or technological challenge, advance, or uncertainty. Now, what the heck does all that mean, Simon, if you don't mind? In day-to-day language, it's this. And it's the fact that you have, if you can move on the slide, thank you, your scratch the head moment. Yeah, so you're sitting down, you're trying to do something, you go, well, I want to do this, but I really don't know how I'm going to do it. You take time off your day job, you bring staff in, you take time off their day job, you put them in a room, you might bring in external experts, and you're trying to get this thing. The answer's not readily available, there's scratch the head moments, and there may even be failures. You might not ever be able to achieve what you're trying to develop. That is taking commercial risk. And if you're taking commercial risk, we should be talking, because that is where R&D activity lies. Thank you, Simon. So who can benefit? And any limited company can benefit, whether they are large companies or SMEs. And SME definition is up to 500 full-time employees with 100 million turnover or less, and obviously 86 million pounds of assets. SME companies will always get more than an RDEC client, is what we call large corporate, but then RDEC large corporates tend to have more people, so typically they may end up being about the similar type of benefit that you will get back. But as long as you're a limited company, that is the main thing. Thank you. In terms of how far back we can go, the legislation allows you to look at your current tax year, your current financial year that you are in, and go back to. So if a limited company's got a December financial year end, we're 2 or 3 months before the end of this current year, and any activity and cost in the current year we'll look at once the year has closed. But with immediate effect, we can look back to. So December 22 is the end of the current, December 21, December 20 means we can go back to January 2020. We put those 2 years in together into HMRC, submit them separately, but put them in at the same time. And we modify the previous CT 600s, and that's what kicked back and allows HMRC to realise the benefit back to you. Thank you, Simon.
Very good.
So what makes up a claim? And the claim is based on 3 key areas if you are a SME company. And a SME company would get a percentage of any member of staff who's taking a pay-as-you-earn salary out of the business and is involved in R&D activity for the duration of that project or multiple projects. You might go, how do we evidence that? Don't worry, we've done nearly 15,500 R&D claims over 13 years, and we have something called the CATAX apportionment tool. So we talk about your role, what you paid, what you think you've done. We then cross-reference it to other companies in a sector that you are or very similar to that. And that allows us to look at the mean of other claims and then go, well, actually, that's very close, or actually really high. Why is it so high? Or is it very low? Why is it so low? So that allows us internally to get the right percentage. Now, the second big area then for a SME company is external invoices. So let's assume because of a time deficiency or a skill gap that you bring in an expert from outside the company, either an individual or a limited company. They've invoiced you then for the work that they do. And as long as it's associated to R&D activity, we can put in 65% of that invoice value into the claimable pot along with the members of salary time. So we've now got two things in there. With a large corporate, you cannot include those external invoices. That's the difference. However, with SME and large corporate, what we can then put into the pot is the miscellaneous claims. These are going to be things such as testing, prototyping, failed projects, material that you bought and maybe had to throw away because your beer that you were trying to develop just didn't work, or it didn't, the flavors were awful. So all of these things are included. We then look inside the claimable pot, and Simon, if you can move on. And in very simple terms, for every £100,000 of expenditure in a proportion of salaries, plus your externals, plus your miscellaneous, assume you spent 100 grand, round number, for every 100,000, if you're profit making, you will get back £25,000. If you're loss making, it works for loss making companies as well, you're going to get back just about 19,000. And any fee that we charge comes out the 25, the 19, or whatever the real numbers are, however, only based on success. And once the benefit has been realized and has obviously hit the bank account. Thank you, Simon. Process. How quick is all this? Typically, it's about 4 months. From your side, we often say that we need about 3 to 4 hours of management time. There'll be an initial conversation with myself to see whether you've got the qualifying activity. I then do some paperwork, get you to sign an agreement that allows us to act on your behalf into HMRC, and then we'll pass that over to the technical team at head office. They will then organise the last stage, which is where my technical lead will talk to your competent professional, either the person that works for you or that's been supporting you from outside. Why do we do that? It means we've got an extra layer of rigour and robustness before we then throw the kitchen sink at it to ensure that what we're claiming for is going to hit the HMRC guidelines. That's critical. Now, once we've done that, we get the tick in the box from the technical team. We then gather the financial information, and we can then build the tax calculations and the tax computations, write up the technical paper and share that back with you. So, and then we get ready to put it into HMRC. So from the first point of me exploring to getting to the point where we've done everything, it's normally about 5 weeks. And then thereafter, once it's got into HMRC, they have a service level agreement that means that they should realise the benefit within 6 weeks, 30 working days. At the moment, they're a few weeks out of that, which is why I'm sort of saying 3 to 4 months is a typical period. But from your side, it's only about 3 to 4 hours of management time. And when the average client benefit is £78,000 at the moment, that's a good return on investment, we think, or we'd like to think so anyway. Thank you, Simon.
Yeah, completely agree with that.
Questions. These are about the only 5 questions I get. I don't think it applies to me. Neither did the sheep farmer or the jeweler or the football club or the haulage company, etc., etc. Have that 15-minute conversation to determine whether or not it's going to be something you could benefit from or not. Sounds too good to be true. It's one of those Jimmy Carr tax avoidance things, isn't it? No, it's not. Here it is. I've actually got it in black and white, not page. It's more than 2 pages thick, but that bit in yellow, if you can see that there, is where they start to describe the definition. The other 200 pages you can read if you want to, but you really don't need to, I assure you. My accountant can cover this. They can. Typically, they don't. It's a bit too niche. There are more and more doing this, but again, I think they would generally say, let's leave it to the experts because they know where the qualifying activity lie and the qualifying costs. And that's why the Institute of Chartered Accountants in Wales supports us, and the SEMA, and that's why we help about 5,000 accountants across the country right now. Great idea, but it's going to take a long time. No, it's not. We need about 3 to 4 hours, and that's split over 3 or 4 different sessions or 2 sessions as minimum. And great idea, but I'm going to look at it in a few months' time. That's okay. However, if you've got a December year end coming up, which is very popular, December and March, then a December year end, talk to me now, because if you don't act on the 2 previous years, December 21, December 20, which goes back to January 20, as soon as January the 1st, 2023 happens, the bottom year, it drops off. and you'll lose any benefit. And I've had an example of that last year where a gentleman lost around about £100,000. So find the 3 hours if this applies to you. That's what I'd say. Thank you, Simon.
Absolutely. A very good question. Can I just a quick interruption there? A left field question I didn't ask previously, Richard. What's your estimate of the number of companies in the UK that don't claim for R&D but could?
My apologies, Simon. It just broke up. Estimate number of
those companies that could claim for R&D and don't.
Oh dear, that figure has changed. I think there are more and more companies which are now claiming because they're becoming more knowledgeable about it. But we'd often say there are 5 million, I think, limited companies in the UK of different sizes, and I would say is a good 60%, even more probably than those 6 years ago. And I said 85, 90%. So I would see it's definitely over half. Definitely over half, because they don't think they can benefit, like the sheep farmer, like the solicitor's practice, etc. They just don't think it applies to them.
Yeah, love it. Good answer. Thank you very much, Richard.
Pleasure. Let's move on to the second legislation, and I often put patent box along with R&D. Why? This is another legislation that came out 9 years after the R&D legislation, so about 2009. What this legislation is encouraging you to do is try and patent your product or process. The benefits, if you can just press on, Simon, thank you, are huge. Here we go. So if you have a patented product or process now, or you're thinking about going down that line, there is a cost of getting a patent, but the benefits are considerable. And that is that second bit there. It means that you will only pay an effective corporation tax rate of 10% on any of the profits that you derive from your patented product or process. But the main thing is this lasts for the duration of the patent, and they're typically 20 years. So it is fantastic. Now this, if the same question about how many companies with a patent are claiming patent box, I'd say only a few percent. It is staggering how many companies are not benefiting from this. So quite amazing legislation. Thank you, Simon. Okay, let's change hats completely. We put R&D patent box together because they're sort of about products that you make, IT systems or processes. We now move on to a different legislation that came out at the end of the Second World War. And this relates to commercial property owners, commercial and not residential. Thank you, Simon. This legislation is open to commercial property owners who are a UK taxpayer. What does that mean? It means that you're a limited company that own it, or an individual who is a higher tax rate paying individual that owns commercial property. Those are the two areas. And the only criteria here is that realistically you would purchase your commercial property for 500k if owned by a limited company and 250k if owned by a higher tax paying individual. Or if you haven't purchased it, that you've spent about £150,000 on renovating that product, or sorry, that commercial property all in one go. Thank you. These are the types of organisations that cannot benefit from this legislation because they've already had taxable benefit. Thank you, Simon. So what does a company or a higher rate tax paying individual get? And just before I go into those numbers, let me just sort of try and allow you to picture this at this time of the day. And I have been drinking, but I'm drinking orange water, orange juice, by the way. It's not anything alcoholic, because what I'm about to say you might go is a bit weird. And that is, take your hotel, your care home, your pub, your dentist practice, your garage forecourt, and you rip it off the foundations, really, turn it upside down. Where we're going with this, shake it, Richard, you're off your trolley, and everything's going to fall out of that building apart from items embedded in the infrastructure. They will include a long list, but things like toilets, radiators, lifts, air conditioning systems, all the wiring. And typically what we find in something like a hotel or a furnished holiday let, where there's lots of toilets, lots of air conditioning, maybe expensive lifts, the purchase price, let's assume that you purchase for £1 million, then typically we find 25% of that £1 million is going to be available in capital allowance tax relief. So suddenly we've got a pot of £250,000. Something like a care home is similar to a hotel, a pub a little bit less, and a warehouse is typically a metal shell with an office on one side. So typically of £1 million purchase, there may only be 100 grand there. But nonetheless, it is there. Now with R&D, Simon, if you can move on to the next one, with R&D legislation, you get all the money back in the year that we identify it. With this legislation, let's assume that you are a limited company that own this hotel. You've got 250 grand of tax relief. You would get back, I'm going to use 20% rather than 19, just for easy math, 20% corporation tax rate. You're going to get 20% of that 250k back in your first year. The second year, you'd have, we started with 250, we've had 50 grand out, we're then down to 200, 20% of that gives you 40 grand. Third year, it would drop to 160, 20% of that gives you 32. So it drops down over a period of years until all that tax relief has been used up. And if you sell the commercial property, you can add in the value or anything that remains into the selling price, and that's where solicitors should bring capital allowances to the table. It's question 33 of 36 on the capital commercial property standard inquiry form, but typically they don't. So just make sure that you raise it with your solicitor if you're going through that process right now. So this slide just gives you an example. So it was a warehouse, actually we found 17%, and the next one, Simon, thank you, is a hotel. There you go. Look at the client benefit there. So a purchase price of that. So a large amount of benefit coming back. Thank you. So far, all I've mentioned to you about your criteria is the fact that basically somebody purchased a property for £500,000 or 250k. That's been the case ever since this legislation was launched after the Second World War to encourage regeneration. There was a small change in April 14, which means that there's now a 2-year time limit in place. So if you did happen to buy a commercial property, let's say in September 2020, well, suddenly, and we haven't made the claim, we're now out of time because here we are in October 2022. And then the other thing is that both the vendor and the buyer should cooperate. And again, that's where solicitors should come in. But so often than not, we find that unfortunately it isn't happening. So there we go. Thanks, Simon. Process is very similar to R&D. We have a general conversation. We send a survey around your commercial property, get all the details, build the tax calculations and the tax computations. We can find the benefit. We then give you an illustration of that, of what you're going to get back. We then submit it to your accountant, and your accountant will then submit the numbers into HMRC. And a little bit like R&D, you'll get your benefit realised back in typically about 3 months. And we only charge our fee, again, upon success. Thank you, Simon. Just 2 more things now to cover off. Remediation of contaminated land. No slides on this. This is just 1 sentence, really. If you are the owner of some land which you purchased to develop, you then turn up and find that there is some Japanese knotweed or asbestos in the ground or the buildings, you're going to incur costs removing that. This legislation allows you to claim a lot of those costs back. Typically a little bit like R&D, for every 100 grand that you spend, you're going to get back around about 25k. So I'll leave it at that, Simon. And the last thing to cover off is our grants. So we've spoken about 4 tax reliefs: R&D, patent box, commercial property, and remediation contaminated land. Grants are different. This is where a company is looking to get funding in advance of investing, typically in a new product. And you can get grants from Chamber of Commerce through what they call local enterprise partnerships, but normally they're about sort of 30 to 40k amounts of money. Where we come in is where you're looking for 100 grand minimum, going up to around about 2 million. And with these legislations, most people have heard of something called Innovate and Smart UK. They're generic pots of money. It doesn't matter what sector you're in, that you can apply for those. However, whilst I look after tax relief, there's a version of me that supports on the grants, a gentleman called Chris Parker, and I'll be very happy to put you in touch with Chris, because there are huge pockets of additional funding at the moment, very big on anything to do with agriculture, and obviously anything to do with the green economy and efficiency and this types of thing. So there we go. That's me done, Simon. 6 minutes left. My apologies for overrunning slightly.
Oh, brilliant, brilliant. So on the grant subject is a really interesting one, right? So all of the small to medium enterprises that we work with are always looking for access to funds. I think many of them think it's very complex and too difficult. And so green energy is one that I've got a conversation going on with at the moment. So should we put solar panels on the roof of our building in order to reduce our energy bills and improve our efficiency internally? And usually the answer from the MD is it's very complicated. I haven't got time to do that. I'll go and leave that to somebody else. Is that something that you would tackle?
Yes. So again, I'd always put you in touch with Chris. Chris will talk through what your project is. You'll then be able to say, look, there are these various types of grants available. And if there's something there that we think we can pursue for you, a little bit like the R&D or the patent box, we take it off you. Filling out all those forms with the grant application is a nightmare. And so that's what we do. It's a case of listen to what you're going to try and do, find something that matches, do all the paperwork, and a little bit like R&D, we claim only upon success, although there is a small fee for writing the report, only because it takes such a long time. So there's a small upfront fee for that. But absolutely, we're talking to anybody that wants to have a conversation with Chris.
Very good. Yeah, so I'd love an intro just to have a chat with Chris, because I think it is really interesting, and many questions about many different things. Can I get some funding from somewhere? And I considered you guys as being the experts in that area. So thank you very much for that. You've answered a big problem for me personally, and so certainly for many of the guys on the call, I'm sure. So any questions? No questions in the question box actually today, which is interesting. You've clearly done a great job. But I am going to repeat a question that we had on Monday, because I think it was hugely valuable. And that is, we buy product in, which we then private label and sell out into retail. Is that action of private labeling going to get any R&D tax relief?
Unfortunately not, Simon. The reason for that is that the R&D would sit with the person that developed the product. R&D starts and finishes from the I've got to scratch the head moment to thank goodness we've developed it. The fact that you then buy it in and do a small amount of branding or reworking and then sell on, there's no R&D, there's no scratch the head moments, there's no technological challenge or uncertainty in that branding exercise. That is just purely what it is. It's making the product maybe more ready available to sale in the market. It's got to be, if you take a product, to have an R&D layer on top of the original R&D, you are doing something fundamental to make that product different or more fit for purpose against then what you then sell it for. And it's about that commercial risk. We're trying to do something, we don't know whether it's going to work or fail or stall.
Got it. Okay, so follow-up question to that. So I'm working with a gin distillery who are producing their own product. Obviously, it's made in the facility and branded, etc. The owners of the business are taking their fee, their salary, as dividends, not as PAYE. Can that cost be covered in terms of their investment in the research and development of producing the gin through R&D tax relief?
Yeah, so first and foremost, gin is one that I love because I love my gins anyway, and I've done a handful, more than a handful, maybe 10 claims for gin distillery, and there's one in the Cotswolds which have had some amazing amounts of benefits coming back to them. They've got an absolute lab, of different things. So gin in itself, the mixing, the recipe, the formulations, the percentages, the shelf, all of those things are R&D activity typically. We then tick the box for the R&D activity. However, are there the supporting costs that go with it? And reality is that pay as you earn is the only bit that we can claim. Dividend is not allowed in the claim because it's already our taxable benefit. So if on a small 10, 11K salary, we'd have to then just look at that element. If, however, they've got somebody head of new product development who's on 50 grand a year and all they do all day is a recipe formulation, there'll be a high percentage of that person's salary that go into the claimable pot with a small percentage of their small dividend and their small salary.
Got it. So the only additional part to that would be the accessories part, the third part of your graph that you put up, which would be any extra costs that were
wastage, products brought in for testing, for recipe formation, they throw it away, and then any experts that might have come in as well to support the R&D activity.
Fantastic. That's a brilliant free money, I think was the phrase you used at the beginning. Brilliant discussion and topic around how to get free money, both from tax relief and certainly in the form of grants. Japanese knotweed, I picked up in the middle there, which is also a really interesting one, right? Contaminated
Yes,
land.
yeah. God forbid anybody that has that stuff.
Absolutely. Richard, you're an absolute star. We are bang on 30 minutes, so appreciate your time as always, and look forward to having you back on Munch&Learn at some point in the future.
Thank you very much indeed, Simon. Take care, everybody. Any questions, let me know. Bye-bye.
Take care.
Bye-bye.